We are from Group C. The company that we choose is Gamuda Berhad. This is our group members, which is me, Siti Nur Aisyah binti Rasli, Fatih Nurhuda binti Abdul Halid, Nur Izzatu binti Azman, Siti Nur Fakihah binti Abdul Hadi, Nur Rashidah binti Mak Zaki, and Nur Izzati Jafiqah binti Mustafa. Next.
So for the background, company Gamuda Berhad, founded in 1976, is a Malaysia urban engineering, property and infrastructure corporation. The organization is well known for experience in completing large-scale infrastructure projects such as roads, trains, and tunnels. Gamuda also has a strong presence in the property development industry, with a portfolio of residential, commercial, and township development. The company operation Gobayan Malaysia with a noteworthy project and initiative in Taiwan, Singapore, Vietnam, Australia, and the United Kingdom. So the main service are civil engineering, construction, infrastructure, property development. Next, Gamuda has venture local and international projects include expressway, MRTS, water treatment plants, and property development.
Next is type of projects. The organization works on a few large-scale projects, mostly related to infrastructure solution, building, and real estate development. Here are some important engineering and construction projects by Gamuda Berhad. First, stormwater management and road tunnel in Kuala Lumpur. Second, next-gen digital IBS. Third, urban transformation Penang Silicon Island. Fourth, rail and metro systems such as MRT Putrajaya Line. 5. Road and expressways such as Lebuh Raya Damansara Puchong. 6. Water and hydroelectric dam, urban regeneration, water treatment and power plant. 7. Port, marine structure and buildings such as Hospital Universiti Kebangsaan Malaysia. 8. Bridge such as Kuantan Bridge. And the last is airport such as Ahmad International Airport. Next, company organization of Gamuda Berhad. Chairman of Gamuda Berhad is Yang Berbahagia Tan Sri Datuk Siti Haji Amrin bin Wang.
Gamuda Berhad, a well-known Malaysian company, operates largely in two sectors: infrastructure and property development. Here's an overview of the prospect business area for Gamuda. Firstly, infrastructure development. Gamuda has a significant presence in the building and development of transportation infrastructure such as road, rapid transit. Second, water environment infrastructure. Gamuda works on water treatment plants and environment engineering projects with an increased worldwide emphasis on sustainable development and infrastructure resilience. So next, international expansion. Gamuda has been looking for potential for worldwide expansion, notably in infrastructure construction. Lastly, innovation and sustainability. Gamuda places a high value on innovation and sustainability and its business operation. The firm continues to invest in R&D to improve building process, increase environmental and sustainability.
For the financial statement, this study was conducted to identify the characteristics required in analysis Gamuda company finance. Financial analysis is the way to examine a company finance to achieve their business decision. Financial statement analysis is important for every business to assess the company financial control. The advantage of focusing on this financial analysis is that it can help to follow the development of the company financial performance. Business trend can be identified if the company perform financial analysis in liquidity ratio, equity, profitability ratio, and market test.
First, calculation is current working capital ratio. The working capital ratio is a useful tool for determining whether the money that is accessible can be used to settle debt by use the formula. Current ratio is total current asset divided total current liabilities. For example, year 2023, total current asset 5,511,255 divided by total current liabilities 2,933,417 and answer 1.88. Then, repeat calculation use the same formula from 2019 to 2022. The current ratio from 2019 to 2023 is displayed in graph 1. Falls between 1.50 and 3 is considered excellent form of current ratio. In 2019, the ratio for the company was 1.49 and decreased to 1.34 in 2020. However, in 2021, the ratio is increased by 2.07 and decreased to 1.63 in 2022. Finally, in 2023, the ratio is increased to 1.88. This demonstrates that the company ratio is in a good place and has room for improvement. Next, calculation asset tax quit ratio. The formula for calculating the asset tax quit ratio is quit assets divided by current liabilities. To get quit asset, must cash plus marketable securities plus account receivable. But in financial statement, in Gamuda Berhad just need to calculate the cash and account receivable, and this item can get in current asset. Example 2023. Quit asset in cash RM976,791 plus RM900 1,353 and get answer in RM 1,878,144 divide total current liabilities RM 2,933,417 and get answer 0.64 and repeat the calculation from 2019 to 2022. Graph 2 show the asset tax ratio from 2019 to 2023. This shows that for the company asset tax ratio is need to be above 1. The ratio 2019 was 0.43, meaning that for every 1 ringgit is current liabilities, there were 0.43 cents in fixed asset. This suggests that it may be difficult to certify short-term obligations. The liquidity situation deteriorated in 2020 when the ratio fell sharply to 0.34. Ratio started to get better, going from 0.49 in 2021 to 0.5 in 2022, indicating a steady improvement in liquidity. Since the ratio is still below 1, it indicates a continuous but reduced risk in meeting short-term obligations. By 2023, the ratio had reached 0.64, the large value in 5 years, suggesting an excellence, although still less than optimal liquidity positions.
Next, I will explain about account receivable turnover. This account receivable turnover ratio is to measure how many times a company converts its receivable into cash of the year. The formula for this account receivable turnover is sales on account. We need to divide by average account receivable. For this company Gamuda, we assume that sales on account is revenue and average account receivable is the receivable in this company, and then we need to divide by 2, which is the beginning of the year and the end of the year. We need to divide that. For example, we take in 2023, which is 5,001,059 and 765. We divide by 2,006,089 and 592.50 cents, and then this value already divide by 2, which is we take the beginning and end of the year, and the answer is 1.92 times. The table shows that 2019 until 2023 of account receivable turnover. This shows that 2019 and 2023 over than 1, but 2020 until 2022 shows that below than 1. For the graph, shows that the account receivable turnover from 2019 to 2023. This graph shows that when 2019 it decreased when happened to 2020, and then when coming 2021 it coming increased, and then when going back to 2020 it becoming decreased again, and then for the lastly going to 2023 it increased again. Next, for the number of days sales in account receivable, we need to know how many days it takes to collect an account receivable. This ratio has their own formula, which is the trick is 5 days, and then we need to divide by the account receivable turnover. This account receivable turnover we need to take from before this calculation, and then just take the times in the year. For the example calculation in 2023, the 365 days we need to divide with 1.92 times, and the answer is 190 of days. The table shows that 2019 until 2023 about the numbers of days sales in account receivable. 2019 and 2023 shows that a few days need to receive in their account, but 2020 until 2022 need more days to the sales in account receivable. This graph shows that from 2019 until 2022, it takes long days to receive their sales in account. But in 2023, they improve a lot because of the 2023, they take a few days only. This shows that 2023 have the improvement of their days to take the sales in their account.
Next is inventory turnover. Inventory turnover is a financial ratio that measures how many times a company inventory is sold and replaced over a period, typically a year. The formula for inventory turnover is cost of goods sold (COGS) divided by average inventory. To get the average inventory equal to beginning of the inventory of the year plus ending inventory of the year divided by 2. For example, inventory turnover for 2023 is 2846,005 divided by 907,142 equal to 3.127. Next is equity ratio. Equity ratio is a financial ratio that measures the proportion of companies' total assets that are financed by shareholder equity. It indicates the level of leverage used by the company and its financial stability. A higher equity ratio means that the company relies more on equity financing than debt financing. For the formula, equity ratio is stockholders' equity divided by total asset. For example, 2023, for total equity of stockholder is 10,926,562 divided by total asset of 2023, which is 55,11255 equal to 1.98.
Next, net income to net sales. Net income to net sales, also known as the net profit margin, measures the percentage of net income derived from net sales. It indicates how efficiently a company converts sales into profits. The formula is net income to net sales, net income divide net sales multiplied by 100. Net income to net sales for 2019 is 15.47%, which is 706,113,000 divided by 4,565,062,000 multiplied by 100 equal to 15.47%. For 2020, net income and net sales is 13%, which is 238,084,000 divided by 1,832,065,000 multiplied by 100. For 2021, 971,299,000 divided by 1,837,441,000 multiple by 100 equal to 52.86%. Then for 2022, the net income to net sales is 31.49%, which is 577,006,000 divided by 1,832,065,000. Lastly, for 2023, 195,042,000 divided by 2,846,005,000 multiple by 100 equal to 6.85%.
Next, earning per share. Below is the formula for calculate to the earning per share. Earning per share equal earning available to common stockholder per weighted average number of common share outstanding. This is 5 years earning per share. For years 2019 is RM 0.01. For 2020, RM total is RM 0.01. For 2021 is RM 0.05. 2022 RM 0.03, and 2023 RM 0.06. Next is price earning ratio. One of the most popular indicator for investor and analysis to estimate the value of stock is the price to earning ratio. The price earning ratio can demonstrate how a firm valuation compare to that it is industry group. In addition to indicating if a company's stock price is evaluated or undervalued. For this part formula below will be used to determine price earning. The formula is price earning ratio equal market price per share per earning per share. Below was the calculation for price earning ratio for the past 5 years. For 2019, the total is 24 equal to 1, and 2020 24 equal to 1, and 2021 is 4 equal to 1, and 2022 8 equal to 1, and 2023 4 equal to 1. That's all for me. Thank you.
So for return on average common stockholder equity ROE calculation is to measure of financial performance calculated by dividing net income by shareholders' equity. Because shareholders' equity is equal to a company asset minus its debt. ROE is considered the return on net asset, and to get net income is revenue subtracted with cost. So for example, return on stockholder equity ROE for year 2023 is 2,500,060 divided by 10,926,562 plus 10,254,420 ringgit divided by 2, so equal to 5.228%.
Next is market segmentation. Market segmentation involves dividing a broader market into smaller, distinct group of customers with similar needs, characteristic or behavior. For Gamuda Construction Company, a leading construction and engineering company in Malaysia, market segmentation can be approached in several ways, such as geography, demographic, psychographic, behavior, sectoral, and project type segmentation. For example of market segment for Gamuda Construction, which are high-income urban dwellers, government and public sector, eco-conscious consumer, and SMEs and startup. Next is strategic implication of market segmentation. First, of strategic implication of Gamuda is product development, which is tighter construction solution to meet the specific needs of each segment, such as eco-friendly material for green projects or advanced technology integration for smart building. Second is marketing strategy. To develop target marketing campaigns that resonate with the values and needs of each segments, like emphasizing sustainability for an eco-conscious consumer. Last one is sales approach, which is its differentiate the sales approach based on the segment, such as direct sales for high income residence project and tender based bidding for government contract.
So for next market situation, for strength, early established in construction sector, increase in dividend, increase in profit, produce high quality product. So for the weakness, insufficient expertise in manufacturing raw materials, decrease in revenue, vulnerable to economic cycles and government policies affecting infrastructure spending, primarily operate in Malaysia with limited geographical diversifications compared to global competitors. For the opportunities, expected housing boom, economic growth, international collaboration project, increasing government focus on infrastructure project in Southeast Asia, providing growth opportunities, opportunities to leverage expertise and enter new market through partnership or acquisitions. For the threats, safety, skilled labor shortage, insurance, liabilities, natural disaster, and lastly rising cost of materials.
Lastly, conclusion. Financial management ensures efficient business operations by documenting transactions and providing key data for informed decisions. Analyzing profit and loss helps managers avoid errors and save resources. Poor financial management can lead to business failure. A budget is crucial for planning, controlling costs, and preventing overspending. It helps managers allocate funds wisely, promoting effective resource use and aligning with financial goals. A solid budget underpins effective financial management, aiding business in overcoming challenges and achieving long-term success. That's all from us. Thank you.